Open your banking app right now. Look at that number sitting there. Your balance. Feels pretty solid, right? Like a fact. Like proof of exactly where you stand financially. Here's something that might genuinely unsettle you. That number is lying to you. Not because of a glitch, not because the bank made a mistake. It's lying to you because of how your brain reads it, and almost nobody realizes it's happening. Let me show you what I mean. Picture this. It's the 3rd of the month. Paycheck just landed. Your balance jumps from $400 to $3,200. Your brain does something automatic in that moment. It registers, I have $3,200. Not, I have $3,200 minus rent, minus the car payment, minus the credit card bill, minus groceries for the next 4 weeks. Just the raw number. $3,200. Available. Yours. That feeling of having money creates a feeling of safety, of freedom, of being able to say yes to things. A dinner out. A new pair of shoes. An upgrade you've been eyeing. And none of it feels reckless in the moment because the number in the app agrees with you. It says you have room. But here's the problem. That number was never actually free money. It was already spoken for. Rent already had a claim on it. The car payment already had a claim on it. The subscriptions quietly renewing in the background already had a claim on it. Your bank balance doesn't show you obligations. It only shows you what's currently sitting there, untouched, waiting to be claimed by bills that haven't hit yet. This is the trap. Your bank account tells you what you have right now. It says nothing about what you actually owe, what's about to leave, or what you'll need next week. And your brain, left unchecked, treats what's there right now as what's mine to spend. Let's talk about why this happens, because it's not a character flaw. It's just how the human mind works. There's a concept in behavioral economics called mental accounting. It's the idea that we don't treat money as one single unified resource. Instead, we mentally sort it into categories, and we treat each category differently, even though it's all the exact same dollars. Money sitting in checking feels like spending money. Money in savings feels untouchable. Money that hasn't arrived yet, like an upcoming bonus, sometimes gets spent in our heads before it even lands. Your bank balance is the ultimate mental accounting trap because it presents itself as a single, simple truth. One number, no context, no warning labels, no countdown showing you what's about to disappear. Just a green light that says you're fine, even when you're 3 days away from being tight. Now let's add another layer to this, because it gets more interesting. There's something called present bias. Our tendency to weigh what's happening right now far more heavily than what's coming later. When you look at your balance today feels real and immediate. Next Thursday's rent payment feels distant, abstract, almost theoretical, even though it's just as certain as the number on your screen right now. So your brain, given a big, comfortable-looking number today and a vague, distant obligation next week, consistently picks the version of reality that lets you feel good right now. That's not weakness. That's wiring. Every human brain does this to some degree. The people who avoid the trap aren't the ones with stronger willpower. They're the ones who've built a system that doesn't rely on willpower in the first place. Here's where this becomes expensive, not just uncomfortable. Imagine two people with the exact same income and the exact same bills. Person one checks their balance, sees a comfortable number, and makes spending decisions based on what's currently sitting there. Person two has a system, maybe a separate account, maybe a simple tracking habit that shows them what's actually available after every known upcoming obligation is subtracted. Person one will consistently feel richer than they are, right up until the bill hits and the number crashes back down, followed by a familiar, confusing feeling. Where did all that money go? It didn't go anywhere mysterious. It was never really there to spend. It just hadn't been claimed yet. Person two never gets that shock because they were never lying to themselves in the first place. They were working with the real number the entire time, not the illusion the bank displayed. Over a year, this gap compounds in a very real way. Person one tends to live paycheck to paycheck and often can't explain why, since on paper their income should be more than enough. Person two, seeing the same income, ends up with consistent breathing room because they were making decisions based on truth instead of a comforting illusion. This is also exactly why lifestyle creep sneaks up on people who are earning more money than ever. A raise makes the number in the account bigger. Bigger numbers feel like more freedom. But if obligations quietly rise at the same pace, a nicer apartment, a nicer car, more frequent takeout, the illusion simply resets at a higher level. You can make significantly more money and still feel exactly as tight as before, because the lie your bank account tells you scales up right along with your income. So what's actually going on here? At the deepest level, your bank account was never designed to tell you the truth about your financial life. It was designed to tell you a balance, a snapshot, a single moment, stripped of context. It doesn't know your rent is due in 4 days. It doesn't know your card statement closes next week. It doesn't know that emergency fund you promised yourself you'd stop touching. It just shows a number and leaves the interpretation entirely up to you. And that's exactly the problem. Most people never build the habit of doing that interpretation themselves. They let the raw number do the talking, and the raw number always tells a more optimistic story than reality actually supports. So here's what you can actually do about this. First, calculate your real number, not your bank number. Take your current balance and mentally, or better, on paper, subtract every obligation you know is coming before your next paycheck. Rent, subscriptions, minimum payments, groceries you haven't bought yet. What's left after all of that is your real available money. It's almost always smaller than what the app shows you, and that's exactly the point. Second, separate your money by purpose, not just by comfort. If bills and spending money sit in the same account, your brain will always blend them together into one comforting number. Even a simple second account, holding only what's truly free to spend, can break the illusion far more effectively than any amount of self-discipline. Third, build a buffer that exists specifically to absorb the surprises the bank balance hides from you. A small cushion beyond your bills means one delayed invoice, one unexpected expense, or one bill arriving earlier than expected doesn't send you into a spiral. Without that buffer, every hidden obligation feels like an emergency. With it, most of them barely register. Fourth, check your real number on a schedule, not just when you're about to make a purchase. People who only look at their balance in the moment of spending are the most vulnerable to this illusion, because that's precisely when the brain wants a green light. Reviewing your true financial picture regularly, outside of spending decisions, keeps you anchored to reality instead of convenience. Here's the idea I want you to sit with. Your bank account isn't lying to you out of malice. It's lying to you by omission, by showing you a single frozen number and letting your brain fill in a story that's usually far more generous than the truth. The number itself isn't false, but the story you tell yourself about that number almost always is. The people who build real financial stability aren't the ones who happen to earn more. They're the ones who stopped trusting the raw number and started asking a better question every time they looked at their balance. What does this number actually mean once everything it's hiding is accounted for? Because the gap between what your account shows and what it actually means is exactly where financial stress quietly lives. Close that gap and the number stops lying. It finally starts telling you the truth.